Hold on to your hats, folks, because the world of finance is changing faster than ever. New financial products hitting the market is nothing short of breathtaking. You might not realize it, but a silent revolution is underway, and it's called ETFs. These investment vehicles have been quietly transforming the landscape of finance, offering new opportunities and reshaping how people invest. These babies have exploded in popularity, and for good reason. They offer a level of flexibility and accessibility that was previously unheard of in the investment world. Get this, global ETF assets are projected to hit a staggering $18.99 trillion by 2027. That's an astronomical figure that underscores just how significant ETFs have become. That's trillion with a T, folks. This isn't just a trend. It's a seismic shift in the way people are thinking about and managing their investments. This meteoric rise speaks volumes about the power and potential of ETFs. They are democratizing access to a wide range of assets, making it easier for everyday investors to participate in the market. Now you might be thinking, Jim, what in the world are ETFs and why should I care? It's a fair question, especially if you're new to investing or have been sticking to more traditional methods. Well, that's what I'm here to tell you. ETFs, or exchange-traded funds, are like the superheroes of the investment world. They combine the best features of stocks and mutual funds into one powerful package. ETFs, or exchange-traded funds, are like the superheroes of the investment world. They're designed to track the performance of a specific index, sector, commodity, or other asset, giving you a diversified investment in a single trade. They're your ticket to building a diversified portfolio without breaking the bank. With ETFs, you can spread your risk across multiple assets, which can help protect your investments from market volatility. Whether you're just starting out or you're a seasoned investor, ETFs offer something for everyone. They provide a low-cost, efficient way to gain exposure to a wide range of investment opportunities. So buckle up, because we're about to dive into the exciting world of ETFs. Get ready to explore how these innovative financial instruments can help you achieve your investment goals. Let's break it down, folks. ETFs are essentially baskets of assets like stocks or bonds that are traded on stock exchanges, just like individual stocks. Think of them as a prepackaged investment portfolio that you can buy and sell with ease. But here's the beauty of ETFs. They offer instant diversification. Instead of putting all your eggs in one basket by buying individual stocks, ETFs allow you to spread your risk across a wide range of assets. This means you're less exposed to the ups and downs of any single stock or sector. It's like having a financial safety net. And the best part? ETFs are incredibly accessible. They typically have lower investment minimums than traditional mutual funds, making them perfect for beginners or those with limited capital. Plus, they're traded on major stock exchanges, so buying and selling them is as easy as clicking a button. Now, I know what you're thinking, Jim. This all sounds too good to be true. What's the catch? Well, like anything else in the financial world, there are some misconceptions surrounding ETFs. One of the biggest myths is that ETFs are risky. While any investment involves some level of risk, ETFs are inherently diversified, which actually helps mitigate risk. By investing in a basket of assets, you're less exposed to the volatility of individual stocks. Another common misconception is that ETFs are only for passive investors. While it's true that many ETFs track broad market indices, there are also actively managed ETFs that offer more targeted investment strategies. So whether you're a buy and hold investor or you prefer a more hands-on approach, there's an ETF out there for you. All right, folks, now that we've debunked some ETF myths, let's explore the different flavors of these investment vehicles. The ETF universe is vast and constantly evolving, offering a wide range of options to suit every investor's needs. First up, we have equity ETFs, which track specific stock market sectors, such as technology, healthcare, or energy. These are great for investors who want to gain exposure to a particular industry or market trend. Next, we have bond ETFs, which invest in a basket of bonds, providing diversification and income potential. These are a popular choice for investors seeking more stable returns and a hedge against stock market volatility. And don't forget about commodity ETFs, which track the prices of commodities like gold, oil, or agricultural products. These can be a good way to diversify your portfolio and hedge against inflation. Section 5. The power of passive investing, riding market waves with ETFs. Now let's talk about one of the most compelling aspects of ETFs, passive investing. This strategy has gained immense popularity over the years, and for good reason. Passive investing is a strategy that involves tracking a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. By doing so, investors can align their portfolios with the overall market performance. Instead of trying to beat the market, passive investors aim to match its performance. This approach reduces the need for constant buying and selling of stocks, which can be both time-consuming and costly. ETFs are a popular tool for passive investing because they offer a low-cost and efficient way to track an index. They provide diversification, which helps in spreading risk across various assets. By simply investing in an ETF that mirrors the performance of a particular index, you can potentially benefit from long-term market growth without the need for extensive research or stock picking. This makes it an attractive option for both novice and experienced investors. Passive investing with ETFs has become increasingly popular in recent years as many investors have realized that it can be just as effective, if not more so, than active stock picking. The simplicity and cost-effectiveness of this approach are hard to ignore. It's like riding the market wave instead of trying to swim against the current. By going with the flow of the market, you can enjoy a smoother and potentially more rewarding investment journey. Section 6. Sarah's success story from skeptic to ETF enthusiast. Let me tell you about Sarah, a young professional who was initially hesitant about investing. She had always been cautious with her money, preferring to keep it safe in a savings account. She had heard horror stories about people losing money in the stock market, and she didn't think she had enough money to start investing anyway. The idea of risking her hard-earned savings was daunting, but Sarah was tired of seeing her savings sit idle in a low-yield savings account. The interest rates were barely keeping up with inflation, and she knew she needed to find a better way to grow her wealth. She wanted her money to work harder for her, so she decided to dip her toes into the world of investing. She began researching different investment options, trying to find something that matched her risk tolerance and financial goals. That's when she discovered ETFs. Exchange-traded funds seemed like the perfect solution for her. They offered diversification, were easy to trade, and had lower fees compared to mutual funds. Sarah was drawn to the simplicity and affordability of ETFs. She appreciated that she could start with a small amount of money and still get exposure to a wide range of assets. She started by investing a small amount in a broad market ETF that tracked the S&P 500. This gave her a sense of security, knowing she was investing in a diversified portfolio of large, stable companies. As she learned more about ETFs, she gradually diversified her portfolio by adding ETFs that focused on specific sectors she was interested in, such as technology and renewable energy. This allowed her to align her investments with her personal interests and values. Fast forward a few years, and Sarah is now a confident ETF investor. She regularly reviews her portfolio and makes adjustments as needed, always staying informed about market trends and new investment opportunities. Her portfolio has grown significantly, and she's on track to achieve her financial goals. The growth she has seen has given her a sense of accomplishment and financial security. Sarah's story is a testament to the fact that anyone can start investing in ETFs and potentially achieve financial success. With the right knowledge and a bit of courage, you too can take control of your financial future. Section 7 ETFs, your gateway to smart and accessible investing. So there you have it, folks. ETFs are like the all-star players of the investment world, versatile, accessible, and packed with potential. They've revolutionized the way we invest, making it easier than ever for anyone to build a diversified portfolio and participate in the market. Remember, diversification is key to mitigating risk, and ETFs are your secret weapon in this game. They allow you to spread your bets across a basket of assets, reducing your exposure to the ups and downs of individual stocks. And the best part? ETFs are incredibly user-friendly. They're traded on major stock exchanges, just like individual stocks, so buying and selling them is a breeze. Plus, their low costs and minimal investment requirements make them perfect for both beginners and seasoned investors alike. Section 8. Join the conversation, share your ETF journey. So, what are you waiting for? The world of ETFs awaits, and it's time for you to join the party. Start exploring the different types of ETFs available, do your research, and find the ones that align with your investment goals and risk tolerance. But hey, I don't want to be the only one doing the talking here. I'm eager to hear from you, my fellow investors. What are your thoughts on ETFs? Have you jumped on the ETF bandwagon yet? Share your experiences, insights, and any questions you might have in the comments below. Let's get this ETF conversation going. Section 9. Unlocking your financial future. Resources for the savvy investor. Investing is a journey, not a destination, and it's always a good idea to arm yourself with knowledge and resources. There's a wealth of information available online and offline to help you make informed investment decisions. For starters, check out reputable financial websites like CNBC, Bloomberg, and the Wall Street Journal. These sites offer a treasure trove of articles, analysis, and educational resources on ETFs and other investment topics. And don't underestimate the power of books. Head over to your local bookstore or library and browse the investment section. You'll find countless books written by experts in the field that can deepen your understanding of ETFs and other investment strategies. Remember, knowledge is power, and the more you know about investing, the better equipped you'll be to make smart decisions and achieve your financial goals.